my list down here with a lot of these triangle formations. And that's simply because the triangle formation is, by definition, a non-trending pattern. So you should have at least that kind of knowledge into what kind of conditions you're looking at in the market, so that'll help you with your searches. One thing I want to look at right now is the Forex markets. And with Autochartist, you have the choice to go with chart patterns, Fibonacci patterns, or key levels. All right, the chart patterns are your conventional triangle, rectangle, wedges, channels. Your Fibonacci patterns start out with a simple ABCD pattern, and they progress to more complex patterns such as butterflies and Gartleys. The key levels are pretty straightforward because they're basically a line on the chart that shows a breakout neither up or down. And you also have a choice to go from completed or breakout. In other words, markets that have already made their moves or started their moves. And you also have a choice to populate with emerging patterns. And it's important that when you do your evaluation, your self-evaluation as a trader, you find out what you want to trade, or what you like, or what you prefer. You ask yourself questions like, what am I comfortable with? You have to know things like, do you want to trade breakouts? Are you comfortable trading higher volatility patterns or higher volatility breakout moves? Versus, say, a trader that likes to trade things that are compact. He's the type of trader that may want to trade a pattern that stays inside of the support and resistance line, whereas a momentum trader may want to trade a breakout like we see here in the New Zealand dollar, US dollar. And that helps a lot when you do your searches, when you set up your searches, that you know what type of trader you are, because then that too will cut through the amount of time and amount of patterns that you look at, so that you can find the type of pattern you like right away, and so then you're able to act on it instantly and decisively with clarity and confidence when you see it happen. So there's no hesitation. So Autochartist will give you the opportunity and show you that opportunity in a list form down here, but it's up to you to know ahead of time a little bit about the pattern and some of the fundamental conditions that exist, and that together, that process should make you a more successful trader. So we look at the population of these charts right now. We're looking at Forex majors, and if I break this down, you'll see that I have populated this with daily charts for my Forex in my search. So my opportunities, I want to look for what I call a top-down approach. I usually build my list by working with daily charts first. So I have the 7 majors here: Euro, US dollar, Japanese yen, US dollar Swiss, US dollar Canadian, Australian dollar, US dollar New Zealand, and the British pound against the US dollar. And why I want to look for dailies at first is because I like to trade in the direction of the main trend. So one search or one trade opportunity that you may want to do is to create a list of these opportunities or these Forex markets that show you the broader base or the longer term daily chart first. So you can see in this case all the arrows are pointing up. So basically we have a trend developing in these the Australian dollar, New Zealand dollar. Okay, that's telling you right here that maybe I should focus on the long side of those particular markets because my daily chart is pointing up. Now after I establish which markets are in a strong uptrend or breaking out on the daily chart, then I tend to break down to the smaller time periods, 240 down to 15 minute, and look for my optimal entry points in the direction of that main trend of the 1440 minute chart. And it doesn't mean that you can't trade against a trend, it just means that you should be aware of the fact that you are trading against the main trend when you say sell into a strong 1440 minute chart rally. And again, that goes back to that evaluation that I talked about in the beginning, that if you know that you're a trend trader or a better trend trader than a counter trend trader, then don't be afraid to experiment with going the opposite. You know, if you see that there's a strong trend and you tend to be a contrarian thinker, then you may want to go with searches that trade in the opposite direction of the main trend. You should also know that when you are trading a trend and a breakout, that you tend to want to, you should give yourself a little bit of room when you're placing your stops so that you can give the market a chance to hit these objectives. When you are trading breakouts and trading trends, again, your stops tend to be a little bit wider because you're looking for a bigger move. If you are going against the trend, then you tend to want to set tighter targets because you are usually using tighter stops. And that's just basic money management. Trend traders tend to be a little bit wider, and they sacrifice accuracy for bigger moves and longer term moves. And counter trend traders tend to be more accurate because they take small losses with tight stops, but they also set very reasonable profit targets. So if you find yourself, when you're looking at your trades, that some trades you have big winners and some trades you have small winners, if you break it down, you may find that sometimes you're trading the trend and sometimes you're trading against the trend. And all that shows up in your trading numbers. Okay, so that's one thing that I do in the search for opportunities, is to start with the top-down approach. The other thing that you may want to look at is that you have to be familiar with some of this terminology that we use at Autochartist. For example, the initial trend. This measures the strength of the trend prior to the chart pattern formation. Okay, if you click on that word, you'll see it pop up. This is what we're talking about when we talk about initial trend. This first move up here before the market begins the pattern. Okay, Autochartist is going to rate this price. We also have a breakout here. Okay, if you notice that the initial trend and the breakout are the two indicators that occur outside of the chart pattern. So I like to pair those two together. Now your uniformity indicator looks for turning points and also equidistant tops and bottoms. It looks for like a rhythm in the market. So when I see that, I'm dealing with the inside of the triangle. When I'm looking at clarity, I'm looking to see if there's gaps or spikes. So the uniformity and the clarity deal with the aesthetics of the chart pattern, or how does it look to the eye? It's an appealing pattern. So if I'm looking for a breakout move, I want to make sure that I had a strong initial trend, because our trend change here shows a continuation. That means that Autochartist is seeing that the breakout is linked to this initial trend. So if the initial trend is up and the breakout is up, we have continuation. So if I like to trade continuation patterns, or if I think the market's going to pick up where it left off before this pattern was formed, I want these two to match in the same direction. I also want to make sure that if I had a strong initial trend, that I want to have a strong breakout, because that would tell me that maybe the same traders that were taking this market up in this initial trend are back in the market and they're going to try to take it up again. So what I do there in that case is I've created a search called Forex Market Initial and Breakout. So in here I have my same universe of 7 major Forex markets, but I go down to the advanced search, and what I do here is I select any direction, up or down, doesn't matter to me, but I want to see if I can come up with some patterns that show a 5-bar initial trend and a 5-bar breakout trend. Now there's no guarantee that under the conditions we have right now that we're going to see it, but I want to show you that under some conditions, if these two are showing strengths of 5 or more, that you tend to get some pretty good breakouts. So once I hit search, see what comes up here. It might take a few minutes here to populate. I'll take out these, and I'll just look at these particular patterns here. So I can see that I have an emerging patterns taking place, which mean that I have strong initial trends, okay? Because obviously there's no breakout in an emerging pattern. Okay, so right now, given a 5-bar initial trend, or 5-bar higher, you can see that up here that these initial trends are strong. I get a pretty clean chart pattern. So based on my knowledge and my studies of the program, the initial trend is very, very strong indicators. But if you're going to search for some pretty good opportunities and some pretty distinctive patterns, I suggest you start with a solid 5 or better on your initial trend. Then as you go down the process, you can see that these are pretty clear channel patterns. This one here is the flag on the Australian dollar, US dollar. Let's see if that will come up here in a second. But as I said, you can see that these lines are almost parallel. These are very clean patterns. There's another channel. And that's what you want to see. And I think that the initial trend has a lot with setting a good pattern in motion. Now, when we do get a breakout, I can leave the search in here. And when we do get a breakout, it's going to show up here on my box here that shows my indicators. And I'm looking for 5 better. So my expectations are that if I have a strong initial trend with a strong breakout, I should get a good breakout pattern. All right, that's one search that I do. Now, if I'm a trader that wants to look at how the pattern forms, then what I do is I take a look at the same Forex markets, but I search for opportunities that have a high clarity rating, 5 or better, and a high uniformity rating. Because as I said before, I want to search for patterns that look good. And those are, these ratings are looking for patterns that are things that take place inside of the support and resistance lines. Okay? So you can see here that we have this distinctive channel up again. Not only was it really strong before looking at initial trends, but now it shows up when we have very strong uniformity and clarity indicators. You can see here also that the initial trend is weak in this particular pattern, but I'm focusing on what's going on the inside of the chart. So these two, uniformity and clarity, they help me search for patterns that look good, that suit my personality. The same with this rising wedge. The rising wedge is actually a trending pattern, and it combines the channel and the triangle to produce this type of formation. So this is, again, a very highly rated clarity pattern. You can just look at it and see clearly that it is a wedge. Now, if I went down to this pattern here, in the 60-minute New Zealand dollar, you can see that this is a very clean triangle pattern. Okay, and it's got high uniformity and high clarity, and we're also getting a strong breakout. So again, determine when you're looking at these patterns. It saves a lot of time. Autochartist will give you the patterns because of the speed and the algorithms that they use. But again, if you want to create good searches based on how you approach the market, whether you're a momentum trader or a support and resistance trader, you need to know that ahead of time so you can create some good searches. So here's a really good look at a triangle pattern that has everything you wanted to in a pattern, and now we finally got the breakout in the target zone. So the one thing the one benefit that Autochartist has is that by selecting some higher grades of ratings or higher ratings, these patterns do become clearer. If you just let it go and let it search out the ratings from 0, ranging from 0 up to 5, you tend to get patterns that don't look as clear. So again, you want to try to search for patterns and opportunities from higher quality ratings for these indicators. Okay, now another thing that I do is when I search for patterns is that I listen to the news and I find out things like what is the market that everybody's talking about. So obviously up until today, because of today's U.S. Fed report, basically since the end of, well, throughout the euro has been the big topic, whether it's been up or down. In the spring, earlier in the year, in the U.S. here, spring, we had a sharp decline in the euro because of the sovereign debt crisis. And then on July 24th, after Draghi vowed to support the euro as much as he could, preserve the euro, and do whatever it takes, I think were his words, we had a shift in direction and a change in sentiment, and the euro's gone on quite a rally. So what I like to do is I like to look at the one market. I isolate euro by itself, so I'm not distracted by other markets. And with this, because I'm looking at one market, I tend to try to populate it with as many of the Autochartist tools as I can. That includes chart patterns, the fibs, and the key levels. All right. I also look at expired trading opportunities just to give me a heads up on what has been happening and what Autochartist has been looking at. Looks like here in the past few weeks we've looked at some ABC chart patterns on anyway ranging from the 15-minute all the way up to the daily chart. So there's different types of patterns that you want to look at different times. And right now the euro is one that's in focus because of the recent strength in this market. So again, to do search opportunities, to speed up the search, you may want to choose to pick the market that's in the news. That helps you find trading opportunities. Now, we've all heard of the term risk on and risk off. Maybe you haven't, but risk on means that the traders want to look at taking on more risk. That means generally means that the dollar is down that day, and traders are looking at higher yielding assets such as gold, stocks, and currencies that yield more than our very low rates here in the U.S. Specifically the Australian dollar and New Zealand dollar. So what I've done here is I create a search for U.S. dollar down. So if I come in and I see that the U.S. dollar is down, like it has been for the past couple of weeks, basically with the Fed talking about pumping more currency into the market, that's weakening our U.S. dollar. I can create a search that selects Euro, British Pound, Australian, New Zealand dollar, because these are markets that are going to go up as the U.S. dollar goes down. In addition, I can select gold and silver, which tend to have opposite moves of the dollar, and I can pick the crude oil market also, because when the dollar gets cheap, there's more demand, tends to be more demand for this crude oil. So I can create a search for opportunities by just looking at coming in for that day and saying, is the dollar up or the dollar down? And that kind of sets my tone for the day, and it helps me search other markets. I could probably also add stock indices in here also. But once I do that search, and since I know the dollar's down, I'm looking for these markets to go up. I can go down here and I can select direction as bull market. And once I select direction for my bull market, then I know that all I'm looking at are chart patterns that are pointing up. So if I give this a spin here and take a look at it, you'll see what I'm talking about. The whole idea is that I know the chart program, the Autochartist program, is going to find me a lot of opportunities, and I'm trying to create filters so that I'm looking at the patterns and the formations that I like to trade, as opposed to looking at so many of them that I spend too much time in a sort process. I'd rather have it sorted ahead of time. So in this case, you can see that we have, when you look at the chart patterns, obviously they should all be pointing up, okay, because I'm looking for bull patterns only, and I'm looking for patterns that suggest that they're going to go up if the dollar is down like it is today. So you can see that for the past few weeks, going from August 31st to September 13th, that these are some pretty solid patterns, and they include daily chart patterns, or these 1440-minute chart. So it tells me that the trend, when I start to see these 1440-minute pop in there, that tells me that the major trend is shifting against the dollar. All right, so that's one search, and that breaks it down pretty quickly. Now, if you click on Fibonacci and breakout, they're not sensitive to the directions. So you're going to get up and down. That might confuse you. That's why it's probably better for you to work with chart patterns first in this with this particular search, and look for one directional market, up moves. Now, because some of you may be just becoming familiar with Autochartist, I'll show you basically what I look at when I do these searches. First thing I want to do is I'm going to search for dollar up in this case. I'm going to create a search so that if I come in at dollars up, I want to see what these markets are going to do. So if I pick markets like the gold market, I can search out gold, and that's going to come up here. I could search out silver. So if I want to see the reaction of the U.S. dollar to gold and silver, I have them in my universe. I also want to look at U.S. dollar to Canadian, and I can look at U.S. dollar to Swiss. You can see how easy it is to populate your searches. And I want to look at U.S. dollar, Japanese yen. So I can put these in here. I can change the name to dollar up. And now I go down to my advanced search, and the only variable that I'm going to check is bearish, because I expect these markets to go down when the dollar's up. Okay, now again, I can go in here and I can filter more, put more filters on, but because I want to make sure that something shows up on the list, I'm not going to touch any of these indicators. If I was trading at home and I wasn't doing a webinar, I don't mind having a fine-tuned search, okay, because I think there's plenty of opportunities every day. But for the webinar, I'm going to try to have it expand its search as much as possible. So if I create the search here on dollar up for chart patterns, let's take a look and see what we have here. May not be any, because again the dollar has been down. So let's take a look. Maybe we'll get a few from the past. Takes a little bit when we first look at the or make the search, because it has to populate it. But once we get it sorted, it should come up. Now I think it's very important that you at least have a strategy when you trade forex markets based on whether you have a strong dollar or a weak dollar. And that's because that's been the driving force in the market. This saying that I mentioned about risk on and risk off has been very popular for the past few years, simply because of that's what's been driving the market. With all the stimulus coming in, the U.S. dollar has been taking a hit lately, and that is making the dollar weak. So all these currencies are reacting that to the upside. So it's important to know what the driving force is behind that. We'll get back to this later after it seems to be taking a little bit longer. Okay, I'll go to this search here. See if I can get it here. Keeps coming back to the same chart. Okay, the other thing that I want to do is all summer long I heard about how the markets were terrible and volume was down, and there weren't a lot of opportunities. And that's going to happen in the market sometimes because, especially in the United States, here we have an election coming up. We have China talking about stimulus. We have Europe talking about stimulus while trying to get their safety mechanism in place. We have the U.S. Threatening stimulus for several months. So we've seen the markets grind higher. But in a market like the euro, we had a record number of shorts in the marketplace as of late July. Okay, so we did have a trending market for most of the year, straight down in the euro. And then on the way back up, it took a little bit of time. And it was gyrating up and down. And that's what happens when you get a lot of shorts in the market, that it takes time to get all of those traders out of the market. And that type of grind wasn't suitable to traders who are used to some fast, quick moves. Those fast, quick moves are usually caused by shorts getting spooked out of the market. Those short traders who want to, who are weak and they get out fast, and that drives the market. But most of the time, it's an orderly process. Nobody wants to sell out in a bad price, and nobody wants to buy it at a bad price. So the market had to stabilize. But at the same time, we had a really good pattern such as a triangle pattern. A triangle pattern is by definition a non-trending pattern. Okay, so if I feel that the fundamentals are going to dictate a sideways market, I'm not going to worry about whether I get a lot of action. What I'm looking for is what formations are the markets setting up for. And if I go in here and I search, you can see that we have ascending triangles, regular symmetrical triangles, descending triangles, and we have a pennant. Now all of these carry the same characteristic. That is, they're wide in the beginning and they narrow. Okay? So you're going to get a lot of action as it begins, but as it gradually moves sideways, you're getting a non-trending pattern. And that non-trending pattern has some valuable information in it. And that's because as these prices, as these support and resistance lines compress, these traders here are getting anxious. They're tired of trading with their buddies, back and forth, back and forth. But as this market nears the apex of these support and resistance lines, it's basically pinpointing to you as a trader when it's going to move. Okay, it can't go. It's going to have to move at some point. Now, the tighter they wind this, tendency is to have a greater breakout. Okay, so if we had a strong initial trend prior to this pattern, then again, as it goes together, when we have a breakout, the narrower these lines become, the greater the breakout tends to be. Now, if you have access to volume, you may want to watch that. If you have access to volatility indicators, maybe the average true range and ATR, if you're using the MT4 platform, you'll see that during this time period, all those volatility indicators are just drifting lower and lower. All right. Now, as a trader, you want to look for those opportunities because you're looking for, well, what happens after volatility goes down? It expands, and then it regresses back to the mean. So when you see your friends complaining about sideways markets, you can almost treat that as a contrary indicator. And Autochartist is going to find those sideways patterns, and you'll see these lists populate with a lot of triangles. So if you start to, when you do your searches, if you start to see a lot of triangles pop up or pennants pop up, that's telling you that this market's getting ready to move, okay, because they are non-trending patterns. Okay, if you see channels pop up or wedges, they tend to tell you that this market's going to trend. And the normal cycle in the market is to go from sideways to trending, from trending back to sideways. So if you can catch that rhythm by just following the Autochartist patterns and how they line up during times of slow, grinded out trades, you're going to get these non-trending, and then once you get your breakout, you usually get a shift into a trending. You can improve your trading quite a bit if you can catch the rhythm of the market. Okay, so if you're going to search for trading opportunities for breakouts, start with the triangle searches, and then after the markets break out, then look for the trending patterns. Okay, that's very important that you pick up on that type of rhythm. So right now I can set up a search where I'm looking at triangles only. Okay, if I wanted to, I could set up a search for non-trending patterns. Now, one key element that Autochartist offers that a lot of programs don't is that we have broken down these chart patterns into we've looked at the success and failure rate. And so it is possible that you can go through this table and you may want to choose maybe 80 as your criteria, and you can set up a search with only patterns that have 80% accuracy, such as a double bottom or head and shoulders or inverse head and shoulders. Okay, so you can then go back to the search list and only have these patterns in there, and that'll give you some confidence that you're searching for patterns that Autochartist deems as highly reliable. Okay, this is a pretty good list here. All right, you can also then go by symbol, and you can do a further search and search for chart symbols that have that are treating these highly reliable patterns. Okay, now you may not get a lot of opportunities because again, the more you filter, the smaller the list. But at least you know that you're trading markets and patterns that have had shown strong reliability in the past. So that's really important. So that again will improve your trading also because you're filtering your list and you're letting the automation help you find these patterns, and then you're using these performance stats to fine-tune which markets work better than others with particular patterns. Okay, that's a pretty logical approach. When I do my analysis, I'm always trying to chop it down by columns and rows and trying to really pinpoint the market that I want to look at. Tell you a story. In the U.S., I don't know if you have it where you're at, but in the U.S. we have a product called ice beer, and it made me think sometimes the way Autochartist or I look at the markets is you start out with beer, can of beer, and they freeze it, and they chip away all the ice, the clear ice around the beer, which is basically water, and then they put it back in the can, so you're really getting a stronger alcohol. And that's kind of how you look at these markets, is you can get a big list, but you want to chip away at what's really going on in the markets. You know, is it really the 15-minute chart that's running the market, or is it the 1440 minute? Am I in a sideways trend or am I in a trend? You know, those types of things. Do I have a, if I see, for example, let me take a look here. If I take a look at some of these Dow stocks, for example. Let me see if I can get this going here. If I see that when I'm running a stock list, I end up with a lot of emerging patterns, that tells me, too, that the markets are trading inside of ranges. If I see a lot of breakouts one day, that tells me that the trend is changing, that we're making new ground. So I try to look at every indicator that's available, and that's chart pattern, and that's emerging patterns also. So I'm trying to populate my lists with and look for a common characteristic. If I'm getting a lot of completed patterns, that means I'm getting breakouts. If I'm getting a lot of emerging patterns, that's telling me that I should prepare for volatility. So use type to find opportunities. Try to find, let me take this out here and look at the chart patterns. If I start to see here completed patterns showing up, let me look here at the stocks. If I see mostly emerging patterns here the last few days, if I see that I only have one recommendation for the day, that tells me that we're in some kind of a sideways pattern and we should get ready to trade some kind of a breakout. So the type that you're looking at, how many you see, how many emerging patterns you see, or how many completed patterns you see, that tells you the type of conditions that we're under. If you start to see patterns such as triangles, that tells you that we're in a non-trending market. If you start to see a lot of channels, that tells you we're in a trending market. So these are the little subtle little things that help you find opportunities. Going back to this impact analysis and the performance stats. Oops, I'm sorry. Let me go back to this. If you're again going through your searches and you want to cherry pick yourself which one's going to work or which one's not going to work, use these statistics to set up the list ahead of time so that you can have all you have to do is make a decision. Okay, so these are all these little, tiny little steps that you could take to improve your trading. And all this information is readily available. You don't have to sit here and try to search for which patterns are best. The data is already given to you. You don't have to search for which markets trade best. It's already given to you. Okay, we have a broad-based search on these chart patterns, but the beauty of it is that you get to come in and you get to pick which factors you want to look at. So if we're looking at, again, chart patterns, maybe you like the inside of it. Look at uniformity and clarity, higher rating. If you like breakouts, try to look for strong initial trends, strong breakouts. Those things tie together. So all of these things are little steps that you could take to improve your trading and to find opportunity. All right, I'll talk briefly about some of these Fibonacci patterns and emerging patterns. And there we go. May not be any, here we go. No, there's no active trading opportunities there. Let me search for it. That's why I was looking at chart patterns. It's not a lot. There we go. When you're looking at Fibonacci patterns the first time, you just want to try to start out with this ABCD pattern because this is the backbone of the pattern. It's called like the lightning bolt pattern. And remember that if you define yourself as a trader, as either trend or counter trend trader, this pattern may be, or the Fibonacci patterns may be of most interest to you because they give you opportunities. If you're a trend trader, for example, and you caught this move up, all right, by identifying point C up here, Autochartist is saying that we could break down into these series of Fibonacci levels. So what you're going to be doing is, as a trend trader, you can decide to get out of the market right now and wait for a pullback into these levels, looking for a resumption of the trend. All right, or you can become a counter trend trader and try to short the market against point C, looking for a quick break. Remember I told you before that as a trend trader, you tend to let the market go until the trend turns or you hit a big resistance point or support point. Well, you can see here that if you're a trend trader, you may want to buy on a dip looking for a big rally. If you're a counter trend trader, you want to make sure that you got a quick out and that you should set a target down here. So trend traders let the market go, and they trade until the trend turns, where counter trend traders tend to have identifiable exits that are tight, looking for quick moves. Okay, so these Fibonacci patterns are designed to trade that way as a trend and a counter trend trader. Okay, so these one pattern has multiple opportunities. All right. Now we also have more complex patterns, such as this Gartley pattern. I'll show you, just give you a little peek here. These are, even though it's an hourly chart or a 60-minute, they tend to be a little bit more sophisticated and based on different numbers. But again, if you want to watch these Fibonacci patterns, they give you very clean entry and exit points. Okay, you can see here that after this ABC was formed and that lightning bolt, the market traded pretty close to this target. It's off by a day or two, and now it's resuming the breaking back or pulling back. So again, any one of these Fibonacci patterns are good if you like to trade trend and counter trend. Okay, patterns, chart patterns tend to be on breakouts for momentum traders, and on emerging patterns you tend to get more the support resistance guy, the guy who wants to trade the barriers. Fibonacci patterns, you get trend and counter trend. Now we also look at breakouts, and breakouts are pretty. Let me see if I can find forex majors. Maybe get some more. Again, it's a slow day, so there's not a lot of patterns to look at right now. A breakout pattern is basically a old support or resistance point. Okay, in this level. And what you want to look for is the space between where the market is and where this pattern, where this line started. Okay, the longer the market is spent underneath a previous top, for example, the stronger the breakout we could get. Okay, that's because people have known this area for a long time, and stops could be building here, and also traders feel that, hey, if this thing gets taken out, then I'm going to see a big move. So when you are trading these approaches and these breakouts, keep in mind how much time, 132 candlesticks in this point, how much time between all the pattern, how much time between the breakout and where we're at right now. Okay, that's one thing that's critical. Now, if you're going to do this search, let's take a look at stocks, see if we can get a good population of stocks. There's not a lot of forex markets breaking out in either direction, so that list is kind of small. If you're looking at stocks, you may want to switch to a intraday search of all the New York markets, or you can keep it at a daily search. When I look at daily, I don't have a lot of breakouts right now, but that's one way you can control the opportunities. You can, again, look at the daily chart, compare it to the stock indices, and you can create a little bit of a trading strategy. If the stock indices are going up, I want to look for stocks that are going up. So I can tie in individual stocks to the major indices also. So those are some of the ways that I look at how I want to search for opportunities. So I'll recap it right now, then I'll answer your questions. First thing I want to do is I want to look, one time I want to do a top-down approach. Okay? That means I want to find what the main trend is doing on the 1440-minute chart. Once I know what that trend is doing, I look for my entries using these smaller time periods. Okay. Second thing that I do is I search for, say, the major forex markets, and I break them down by the patterns. Okay. If I believe that, if I search for non-trending, that means I'm looking for consolidation or triangle patterns that are telling me this market's going to break out at some point. If I search a list of channel patterns, that's telling me that I'm getting a trending market. So I also want to look at my type of and my patterns. If I'm getting a lot of channels, then maybe I should anticipate that these trends will come to an end. If I'm getting a triangle, that's telling me, a lot of triangles are telling me that we're ready to make an explosive move. Okay, I also rate my initial trend and my breakout so that I can find opportunities where I'm picking up a breakout in the same direction as the initial trend and with the same strength. And then if I'm a trader that wants to look at how appealing the chart pattern is, or if I'm interested in trading what's going on inside of a pattern, then I focus on uniformity and clarity, or higher rated uniformity and clarity. And I hope that I pointed out a few little areas that you may not be aware of. These performance stats are really good for building searches. Again, go through here, search out the best performing patterns, the best performing markets, and you can make that filtered trade, and it could help you improve your trading. So I'll take some questions now. Feel free to ask anything you want to. Let me get set up here, drag this out. All right, go ahead and feel free to ask questions. Let's see. I'll give you a few minutes here to ask a question. What about exits? All right, so thank you, Randy, for asking that question. As I said before, that the it's commonly accepted in trading that as a trend trader, you're going to exit when the trend changes, which means you're going to get stopped out by a trailing stop. When you're a counter trend trader, your exits tend to be a target price because you're going against the trend, and you usually feel really happy when it hits your target and you're out, because you almost get that feeling that you beat the trend. That tends to be the universally accepted ways to exit. Trend traders get exit on stops. Counter trend traders exit at targets. So that's how you want to look at your approach. If you're trading momentum, remember you're looking for you're going to trade more frequently. That's again a mathematical given. If you're a trend trader, you don't trade as often. Your losses tend to be a little bit wider, but your profits on trades tend to be bigger. Trend traders tend to sacrifice accuracy also. All right, as a momentum trader, you're trying to get accuracy up because you're getting smaller moves. When you're trading momentum, you get a breakout. What I usually do is when I watch an Autochartist pattern, if I get a big candlestick on a breakout and I'm in it, then as soon as I see any hesitation, or if the next candlestick is red, I usually get out, even if it doesn't hit the target, because I got in with momentum. So I call that rule, you go home with the girl you took to the dance. If you're going in on momentum, don't switch in the middle of the move to a swing trader, because chances are you're going to be sized too big, and you're going to get caught in a move that you wanted to be short term. You just turned into a swing trade, and now you've made the stop wider, and you're locked into this position, and you're missing other opportunities. So that's why I said determine whether you're a momentum type trader who likes breakouts before you get in the market. Don't make that decision while you're in the market. All right, we say here in the States that it only takes a small loss to turn a short-term investor into a long-term, or short-term trader into a long-term investor. So if you're going for momentum, set quick exits, and if you're trading the trend, give yourself some room for the trends. All right, is there a place where we can view previous recordings? Yes, you can on the website. We have a a resource and education set up here that'll show you links. Okay. I also do some videos on YouTube. So if you go to the Autochartist.com website, you'll see links to all these places. Facebook, Twitter's also. And this is being recorded here. Is AC able to recognize Renko and P&F patterns? No, it's looking at candlestick bars. It's not programmed to switch the style of the bar. Can you repeat correlation between oil, gold? All right, what happens is when you have a stronger dollar, then commodities priced in dollars tend to become more expensive to foreigners. So over the long run, they'll demand less. That's why at some time during the year, it might last 3 months, it might last 6 months, it may even be the whole year. You're going to see this. Crude oil, for example, will be down when the dollar is strong. Gold is tricky. Generally speaking, you either want to hold paper or you want to hold a hard asset. So if a dollar gets weak, gold should be strong. If you took it on a 10-year basis, you'll see that very clearly, that gold's gone up and the U.S. dollar has gone strong. But there are certain times when traders don't know, like this is between February and July. They didn't know if gold was a currency or an investment. Okay, that was the problem with gold and why it collapsed from 1800 down to the 1600s. Because traders looked at gold and they at first said this is a hedge against the dollar and inflation. But then they realized that they had so much profit in the moves that they didn't want to, where half their money got wiped out a few years back. So these were the traders who turned into investors in gold, and they got out. All right, now when there's new money coming in the market and the dollar's weakening, these traders have turned in, these investors have turned into traders again, and they're driving the gold market higher. So overall, when gold is, when the dollar's down, gold is up. Okay, that's what the correlations are between gold and assets. With the Dow and stocks, it's not tied too much to the dollar. It's just the fact that there's stimulus being pumped in, and traders want to get return for their money. So when you have you're earning zero here with money in the bank, your alternative is equities, and that's the reason why all these stimulus rumors help drive up equity markets. The correlations between the dollar and the stock market are difficult to track right now, but when we do go into normal market, when there isn't any stimulus, you'll see that when investors, for example, will borrow Japanese yen, and then they'll sell the yen and buy the dollar to invest in stocks. You'll see the carry trade come back. There's too many markets right now with interest rates near zero where almost every one of them could be a carry market. A few months ago, a few weeks ago, was the euro was becoming a carry market. The yen is definitely a carry market. The dollar became a carry market for a while. And that's where you borrow at zero and then you turn around and convert it into a stock. So there's different plays like that take place at different times. How about scalp trader? Can you use for fast? Yeah, I think if you go down to, here's what I look at as scalp trader. You might be a tick trader or a 1 minute bar trader. And the way I would use Autochartist is if I know that I have a as a scalp trader, you're probably focusing on one market. If I knew that my hourly, my 30-minute, my 15-minute were all pointed in one direction, then I would use my scalping techniques to try to take advantage of that knowledge, trade in that particular direction. Okay, I wouldn't consider trading a 15-minute chart scalping. I'd consider that more intraday trading. But if you're going to be a pure scalper and look for quick moves on 1, 2, or 3 minute charts, then I would try to trade in the direction of the main trend of every time period I could look at. That's how I would use it for scalping. How do I get started with Autochartist? And if that answered that, let's see. And stocks are artificially high through stimulus money. That's an opinion. Stocks could be artificially high because of stimulus money. That's what we'll find out today. Because when you have the worst kept secret is the Fed's going to come out with stimulus money today. So from an Autochartist standpoint, you're probably going to want to look for markets that have compressed. If you go to, if we look at the indices here for trading opportunities, let me see if I have it here. If I want to look for patterns, I believe we have, yeah, we have this tight pattern developing in the E-mini S&P. It's been trading in a, let's see what this is. It's a rising wedge. I was going to say triangle. So a rising wedge is a trending pattern. So you've had a trending pattern. And usually when you go from trending, you go to non-trending. So right now we're bunching up here near this resistance line. And Autochartist is calling for a break back down to the support line. So far this is an emerging pattern. So this pattern is saying that we could see an initial move up because the trend is up, but be prepared for a shift back to the downside. And that's really what the news is saying. Because everybody knows that the Fed's going to say something today, and the majority of the market, I think that 90% of the market's betting that the Fed's going to provide more stimulus. It could turn into a buy the rumor, sell the fact situation. That means on the official announcement, the market goes up, and then it closes down. So it may make a closing price reversal, for example. The only thing you can expect, count on is volatility today. All right, the direction is uncertain. All right, if the Fed passes on the news and they decide not to provide any stimulus at this time, then that's usually bullish. That should be bullish for the dollar. So that's where you'd be looking for dollar up searches. Okay, that would mean pressure on the euro, British pound, gold. All those markets could get hit pretty hard. That would be if the Fed passes on stimulus. But according to this chart pattern that we're looking at here, it's about the middle of a trending chart pattern. And that means that there's still some indecision in the marketplace. But again, you can use this resistance and the support for breakouts. Since we are closer to resistance and we are trending, I would look to trade in the direction of the trend, and that would support a really strong breakout. If I'm using momentum to get in and the market stalls, all right, then I would be out fat. So I'd be looking for today momentum moves and breakouts, possibly to the upside in equities, euro, British pound. And I want to be quick to get out because look at the size of this trend. You know, since July 22nd, it's been up. You know, it tends to run out of time. And that's how you can use these dates down here as well as the chart patterns to say, how long is this market going to stay in a trending pattern? And that's what you should begin to anticipate. All right, let's see if I got another question. And that looks like it's it. I appreciate you guys taking the time today to listen to me, and I hope you picked up a few tips on these strategies and these little techniques that I use to find trading opportunities, and I hope that helps you improve as a trader. All right, thank you very much. Stephen Hartwell, I did not answer your question. Let me see if I can find it. I want to repeat your question. Maybe I can find it here while I have a couple minutes. Oh, how get Autochartist to work with TradeStation. It's not part of a TradeStation package. That's why you can't use it on it. It comes from the Autochartist server. So if you go to the website, you can get it works with MT4 though. You're going to get chart patterns with MT4. You can use the web version. Those are two ways to look at it. But right now, it doesn't work with TradeStation. How's that? Okay. All right, that's it. Thank you very much. Have a great day. Keep your powder dry till the Fed makes their announcement, and be nimble today because we could see some heavy volatility. Thanks again.